The news day continues here on One News Now. I'm Danny Laurel. Now let's take a quick peek at the equity space, kicking off with the S&P 500 over in the US up by 0.4% overnight. The Dow Jones and the Nasdaq on the same green path. But if you take a look at how Asia Pacific is doing at the open, it's what they say stalling. Global equities in general are still trading flat into this first couple of weeks of 2023, and you can see quite a mixed picture here. The Hang Seng down by 0.3%, whereas Japan is actually in the green. You've also got a very mixed bag when it comes to Shanghai and Shenzhen going in opposite directions. Over in Singapore, the FTSE Straits Times is in the red. That's down by 0.3%. We are actually the shining star, at least, when you take a look at it from a year-to-date perspective when it comes to our Philippine Stock Exchange Index. However, you do see quite a pullback happening this morning. There seems to be quite a strong resistance level over at 7,000, which is causing us to pull back to 6,900 levels here. That's down a hefty 1%. But if you take a look at the 3-day chart here, you can still see us having gained by 2%. Now, what happened yesterday? What was that entire, bump up or uphill climb here? Well, that was driven by the banks and the conglomerates, and we're still hopefully in bull market territory, at least in the year to date. I'll pull that out for you guys. We're up by 25% since the since the low of September 30. And if you take a look at how we've started the year, this is actually the best annual start the index has seen since 1992. That's around 3 decades, and we did have a foreign influx of funds that's at a 5-month high. Now let's take a quick peek at which ones are the ones dragging down the index this morning. Quite a reversal of fortunes here from yesterday's trade. I mean, BDO is down by 1.6%, but that went up by 5.4%, or as much as at least BPI as well, down by 2.9%. So a couple of the big banks are also the ones dragging down the bourse this morning. That had advanced by 3.6%, and you have the holding companies as well pulling down the index. You've got Alliance Global, SM, GT Cap, Ayala Corporation. Incidentally, these were the ones that had been rallying as well yesterday. I mean, take a look at the year-to-date of our holding firms, which is what they say, a proxy of the Philippine economy. It's still up by 5.8%. And finally, just one quick peek at one specific stock to watch, and I'm talking about C-REIT. That's as they are confirming that Citicorp Renewables is considering an IPO for this year. And nevertheless, you can see that going in tandem with the rest of the index, down by 0.4% to 2 pesos and 38 centavos. Meanwhile, cash remittances grew by 5.7% to $2.64 billion in the month of November, and this was the lowest amount sent home by OFWs in 6 months, or since the $2.43 billion in May 2022. That's according to data from the Bangko Sentral. Still, this was the quickest annual growth since the 7% recorded in June of 2021. It is also above the Bangko Central's 4% full-year target. Now, the central bank attributed the growth in cash remittances in November to higher receipts from land and sea-based workers. Analysts added that OFWs may have sent more money to their families as inflation continued to accelerate. Now, apart from this is actually a print which was above what economists had predicted for the month of November. Their estimate was around 4.2%. And on that note, I did want to take a quick peek at how the peso is reacting, strengthening here and zeroing in on the 54 levels. You can see that slight bump down there. Quite the strengthening here happening towards the beginning of the year. A little bit of paring back there, but nevertheless, after this remittance sprint, strengthening to 54.842 to the greenback. Now we'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Danny Laurel. Now, a study by Fitch Solutions reports that the Bangko Central's policy rates could peak at 6.25% in the first half of the year. Now, according to Fitch Solutions, the BSP could raise its benchmark rate by as much as 75 basis points in the first 6 months of 2023. Further tightening is seen as Fitch Solutions expects inflation to drop only below the central bank's 4% target in the fourth quarter. However, Fitch Solutions warns that more aggressive hikes by the Fed could once again trigger the peso's volatility. This is seen to prompt steeper hikes by the BSP to ensure peso stability. The central bank last year hiked its benchmark interest rate by 350 basis points, bringing it to a 14-year high of 5.5%. The Bank of Japan stunned markets in December of last year with what looked like the first step away from the stimulative policies of the past decade. Will the BOJ do it again at tomorrow's meeting? Bloomberg editor Kathleen Hayes reports.
Haruhiko Kuroda rocked markets around the world when he led the Bank of Japan's move to alter a bedrock of its ultra-easy monetary policy by adjusting the parameters of its yield curve control tool. He had given no signal he was about to raise the YC ceiling on the 10-year JGB and had kept insisting this would not happen until inflation was sustainably above 2%.
After the meeting, speaking to reporters, Governor Kuroda insisted this move was merely a tweak, not the first step on the path toward policy normalization.
The distortion of the yield curve has become very strong, so we made some adjustments today.
Central bank tightening has pushed up bond yields around the world, and economists see it as the force that pushed the BOJ to widen the YCC band, and which may push it to boost the YCC ceiling up to 0.75 or even higher.
I think that would be virtually complete change of the framework of YCC. So if that is the case, I think completely abandoning the YCC will be much more straightforward and also makes the BOJ in a much more stable position in terms of the framework.
Others say widening the YCC band is simply the BOJ putting on its shoes but not yet taking the first step. Instead of widening YCC further, they expect Kuroda and the BOJ to send a signal by raising their 2023 inflation forecast to 2%.
If it goes beyond 2%, then that's good reason for preparing for the first step for the normalization.
Whatever Kuroda decides to do with YCC in the final two meetings of his decade-long tenure, there's widespread agreement that BOJ is on its way to policy normalization this year, even if the first big steps aren't taken until a new governor takes charge in April. Kathleen Hayes, Bloomberg, Tokyo.
For more updates, visit News 5, the Philippine Star, and Business World online. Visit our website, onenews.ph, for more in-depth analysis. You can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com and stream One News live anytime, anywhere. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.